Hey everyone, in this video I'm going to highlight my top 17 stocks to buy right now. Why should you care about my stock picking? Well, I'm going to show you the results of my picks so far this year so you can judge my stock picking skills yourself. Of course, I started the year giving you 23 top stocks to buy for 2023. I've updated those recommendations and now I'm left with 17 stocks to buy. So let's look at how my picks have performed so far this year, starting with the first batch of stocks where they are all positive, right? All positive gainers here. The lowest total return with PayPal stock giving you 0.29%. The highest total return being Mercado Libre stock giving you 51.26%, and some really good performers in here as well, including Alphabet at 19.6%, Microsoft at 27.25%, and a bunch of stocks giving you between 4 and 9% total return. In my next batch of stocks, there are some losers in here. The biggest loser, Etsy at negative 17.38% return, DocuSign negative 14.47% return, and 3M with negative 13.10% return. But the winners are even bigger in this batch of stocks. You have Meta Platforms, which is up 97% on the year. I have an update to this recommendation, so stay tuned. You also have Salesforce at 45% return for the year, and you have Airbnb that's up so far 39% for the year. Airbnb was my top stock to buy in 2023. If I had to pick one stock at the beginning of the year, I chose Airbnb. It's already up 39% for the year. So there you have it. That's my performance. It's pretty good so far year to date in 2023. Now I've made some changes to this list. So let's look at some of the changes. There are some changes I made throughout the year, and there are some new changes that I'm making right now in this video here. So this is breaking right now. You're going to be the first to hear about these changes. So first, let me talk about the changes that I made earlier in the year. So one of them being Chegg stock, right? Chegg, I recommended for my investors to sell around February. I took Chegg off my list. Not only did I take Chegg off my list of top stocks to buy, but I changed it all the way to a sell. It had the most dramatic change of any recommendation that I can think of in the last 2 years. And the dramatic change was a result of ChatGPT. ChatGPT pretty much made Chegg's business obsolete, right? And investors didn't realize that until the most recent quarterly update by Chegg, where the stock crashed almost 40% after the earnings announcement, when Chegg's management finally came out and said that ChatGPT is crushing our business. But I warned you around February to sell Chegg stock. So if you followed that recommendation, it will have saved you some of the downside, although I will admit you will have still lost money because I recommended Chegg around January, and then I recommended the sell around February. So you will have lost around 15% on that recommendation. Another one I changed is Domino's. Domino's stock I recommended, I took off my list of stocks to buy around March. So you will not have saved very much money by my change in having Domino's turn into a sell from a buy, but I did change that recommendation around March after the earnings announcement came out, and I saw something in that report I didn't like, and I changed my recommendation. I took it off of my top stocks to buy. Another one, Meta Platforms. I released a video a couple of days ago saying, you know what, enough is enough. At that point, when I made that video, the stock was up 98% on the year. That's a massive gain. And I said, you know what, that's enough. Let's take profits. let's sell Meta Platforms. The stock has had an incredible run, so I took Meta Platforms off of my list of top stocks to buy. I've also taken off Mercado Libre off my list of top stocks to buy for the same reason. I mentioned this, I think around March. I said, you know what? It's time to take profits in Mercado Libre stock. It's up very nicely so far this year, and we've only just reached a brief fraction of the year. So let's take profits in Mercado Libre. So this one I've also taken off my list of top stocks to buy. The ones that I'm changing today, right now, I'm changing Palo Alto Networks. I'm recommending to take Palo Alto Networks off the top stocks to buy list. It's up 27% for the year. It's had a nice run. I want to take this off the list of top stocks to buy for the rest of the year. I also want to take off Nike off the top stocks to buy for the rest of the year. The stock is also up nicely so far, and I'm so far year to date, I was expecting when the Chinese economy reopened, I was expecting a big tailwind from that economic reopening. I haven't seen that yet with all of the companies that I follow in that region. The economy in that region hasn't rebounded the way I thought it would. So I want to go ahead and take Nike off my top 23 stocks to buy. All right, so those are my updates. I've removed these 6 stocks off my top 23, which leaves me with 17 stocks left to buy for 2023. So I will briefly go over those stocks right now. You've got Etsy, eBay, Salesforce, the Walt Disney Company, Airbnb, Home Depot, DocuSign, 3M, and Adobe. You've got a mix of dividend stocks and growth stocks here, but what you don't have is expensive stocks. I have here the valuation of all of these stocks, the forward PE ratio. The highest, the most expensive is Airbnb at the forward PE ratio of 27.96. The rest of these stocks are at a forward PE ratio of 21 or below, with eBay being just 9.7, a relatively inexpensive stock. So, in addition to the good prospects these companies have, they're also not trading at expensive valuations, which if you've been following, if you've been watching my videos, you know that valuation is very important to me. I Even the greatest companies, if they're too expensive, I would not be willing to recommend them, just because if everybody already expects the great performance, then it's already priced into the stock. And so you're not getting any value by investing in an excellent company, but paying too much of a price for that. My next group of stocks here is Alphabet, Visa, MasterCard, Microsoft, Target, Netflix, Starbucks, and PayPal. Again, a mix of growth stocks, dividend stocks, and stable, you could say non-fast growing stocks, right? Like Visa and MasterCard, they're not expected to grow very fast or, by double digits on the top line, but they're incredible companies with excellent profit margins, trading at reasonable valuations. So I really like these stocks and I have them in my list here. And again, what you'll notice is the most expensive stock is Microsoft, trading at a forward PE of 27.99. All of the other recommendations are trading below that valuation. So overall, my top 17 stocks to buy, none of them are over a forward price to earnings of 30. I don't like expensive stocks. I don't like them. That comes with too much risk, especially when you're in a scenario where the economic growth is slowing down worldwide. Growth in the US has slowed considerably, and the risks of a recession in the US are rising. That makes owning expensive stocks even more risky when you're entering an economic slowdown and possibly a recession. All right, so there you have it, my top 17 stocks to buy, my update. I've removed 6 stocks from my list. I hope you've enjoyed this video. That's all I've got. If you want more videos just like this one, or if you want deeper analysis into any of those stocks that I mentioned here, please subscribe to my channel. I've got deeper videos, multiple videos on each of these stocks mentioned here. So please subscribe, watch those videos before you make any decisions. There wasn't enough detail in this video to give you a thorough understanding of any of the stocks mentioned here. This was just a brief overview and update to my list of top stocks to buy. Thank you so much for watching, and I hope to see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.